Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome to the show. I want to thank you for tuning in today. My name is Mike Harrison, and this is the Lifestyles Unlimited Real Estate Investor Radio Show, where, as always, we're working on your financial freedom. I've got a guest on today's show, and I know you'll find his story somewhat thrilling. He has taken everything that we teach here at Lifestyles Unlimited to heart and has absolutely put it to use. He's been a Lifestyles Unlimited member since 2011, and he retired 5 years after joining and investing in real estate. He's owned single-family homes, but his portfolio today is all about passive investing in apartment communities. But as you hear his story, I want you to keep in mind a couple of points. One, I want you to think about the power of compounding your investments. And I want you to think about what you can do in a short amount of time. But the bottom line, create a plan, get started, and stick to the plan. Michael, thank you so much for coming on the show today.
Hey, happy to be here. Happy to join you guys.
Excellent. Michael, why don't you provide a bit of background about yourself for our listeners?
Okay. I'll start off back in college. I went to Oregon State University. I'm from Oregon originally. I moved out here 2009. Mechanical engineer, worked on the space station project out in Alabama for Boeing. Spent 5 years down south with the Southerners. Had my two boys were born there in Huntsville, and they started picking up a little Southern twang to their accents. So we went back to Oregon. They grew up there playing soccer and being around the grandparents. I was at Hewlett-Packard there in a small town called Corvallis. Spent 21 years at Hewlett-Packard, the whole time doing that 401k, company matching 12%. Lost half of it in like 2000 and 2008, in the market crashes. So that was painful. It took like 8 years to get back to where I was.
It was.
Times.
Yeah, I was right there with you.
So we moved. So Hewlett-Packard moved a bunch of us IT guys out to Austin back in 2008, 2009, and I tried to sell my home in Oregon at that time. Of course, the housing crash was going on. It just gotten started, so I couldn't sell it. Ended up renting it for a couple of years, which turned out to be a good thing. And we moved here to Austin and heard you guys on the radio and attended that little workshop that you're always pitching. We signed up that night. I even got my wife to agree, so we went down there, driving down to this little workshop. She's like, okay, we're not going to spend any money tonight. Let's get the checkbook.
Yeah.
And I'm like, okay, we get there, and we listened for an hour, and we were both convinced, and signed up, went to that 2-day training, and I signed up there as a full-fledged member all the way to, the apartment level membership.
Interesting. So you saw it.
It's been going great since then.
You saw what Lifestyles could do immediately, and it actually took me quite a bit of time to kind of get in step, I guess, so to speak. But you're a software engineer by trade. What the heck was your attraction to real estate? It seems like you were doing great in your career. You're feeding the 401k. You're doing everything that they tell us to do. What went off in your mind to make you even look twice at real estate investing?
Yeah, my father had always dabbled in real estate. He was a dentist out in Oregon, but he had a good friend of his was a realtor, commercial realtor, and was always selling him, small apartment complexes that I would actually paint during my high school summers and college summers. So he had a 4-plex and an 8-plex. So I'd known about real estate. He never actually sat down and talked to me and showed me the financials. So I had no idea if these things made money and how much. But I was aware, and he'd given me the book Rich Dad Poor Dad 20 years ago. And in that book, it talks about how to develop a team. And that's hard to do by yourself. I need my CPA and realtor and lawyers and brokers and bankers, and it's like, I didn't know where to start. So that's where Lifestyles really spoke to me when I went to those meetings. It's like, we have a team in place, ready to go. I'm like, okay, now I can do it.
Yeah, yeah. Did you find, I take it Lifestyles was the only real estate investment group that you joined. You found them initially, but there's such an emphasis at Lifestyles Unlimited on that education piece. Did you find that as a shock or a turnoff, or what was going through you and your wife's mind when you sign up for a group and they're like, okay, this is all about education and networking? Yeah,
so that's really what we're looking for. We're looking for like-minded people that are doing the same thing that we can talk to. So here in Austin, because there wasn't a physical office for Lifestyles, there was a group that started meeting. We'd meet at Starbucks and eventually outgrew that and ended up at Rudy's. And we still meet today at Rudy's a couple times a month. And it's just people getting together, talking about our deals, the single family and the multifamily, how issues we have and how to get over it. And of course, there's the mentoring at Lifestyles. They'll do that as well. But it sure was nice to be around people that were doing and going through the same thing. So we started off immediately with single family. We bought a few houses in Round Rock area, bought a few in San Antonio. And then at the same time, because I wasn't sure which was right for us, we did a couple of multifamily deals. They all turned out great. We didn't have a bad deal. So,
what was it? We've got a few seconds, Michael. What attracted you to the passive side versus the houses?
You could put a lot more money to work. So I started off with, once we got that home in Oregon sold in 2011, we had almost $400,000 to invest. And buying houses, they're $10,000 a pop back then. That was going to be a lot of houses and a lot of work. And Lifestyles teaches, if you want a job, buy single-family homes. If you want to retire, buy multifamily. So
okay. Well, we're going to, Michael, I'm going to cut you off there. We'll leave it at that. When we come back, we'll talk about your passive investing portfolio. This is the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Now, let's get back to your map to financial freedom.
Welcome back to the show. I appreciate you tuning in today. My name's Mike Harrison. I have a very successful and experienced passive apartment multifamily investor here on the show. If you'd like to speak with him or have a question for myself, our number is 855-497-4335, 855-497-4335. Give us a call. Or as always, you can email me, and I do respond personally. Ask Mike at luinc.com. Ask Mike at luinc.com. It stands for Lifestyles Unlimited. And as always, if you miss any parts of this show, you can always pick us up on your favorite podcast app or at the website, lifestylesunlimited.com. Just click on the radio button. You'll find this show as well as many other shows with the other host right there. So, Michael, when we left off, you had started investing in real estate. You joined Lifestyles Unlimited. You had purchased 6 homes, and you started your passive investing portfolio. I take it that was 2012. Why don't you share with us what you were able to do with that portfolio and where it is today?
Yeah, well, it's going to be a long story. I'll try to shorten it.
It's a long portfolio. I've seen it. It's beautiful.
So my first deal back in 2012, City-Based Vista was a 360-unit apartment community down in San Antonio on the south side. I've actually never physically been there yet.
Wow.
So, and that's true with a lot of these apartment communities that I've invested in. You don't need to actually go to them and touch them. You can if you want to, with permission. But you don't need to physically go there. So this one I put $80,000 in. So that's my investment, my capital investment, and it was what Lifestyles refers to as the value play. So it was pretty run down. There was a lot that, there were 360 units. All the units need to be painted on the outside to make it look nicer, landscaping, air conditioning, maintenance. And then the guy that's in charge, he was rehabbing all the units. I think he had 3 crews going at the same time to get through all this. And he's still, I think, up to 360. So this has been, since 2012? So 9 years. He's still got like 10 or 20 that have never been rehabbed just because the people have never moved out.
Yeah.
You can't rehab it when people are living there.
That's a big community, too.
So that $80,000, a year and a half later, we bought this thing for $6 million. A year and a half later, he went back to the bank to do a refinance, and the bank valued it at $22 million.
Wow.
$6 to $22 million. That's called forced appreciation, just because he was able to rehab the units and start charging more rent.
Yeah.
And that created value in the property. So we took out a cash-out refi. For my $80,000 in, I got $119,000 back out, tax-free. And I was just floored. First, I'm used to a bonus check from Hewlett Packard of $5,000 at Christmas.
Here you go.
$119,000 check. I'm like, holy smokes, what do I do with this?
Tax free too, by the way, for our listener. Yeah.
And I didn't even believe that at first. It wasn't until I finally did my taxes. My CPA said, "Yep, on your K-1, we ended that. It's tax free because it's a loan. You're getting a loan from the bank. You do the same thing with your house. It's a tax free loan." So I reinvested it. I'll put that into another deal because that's what you do with your seed corn. I got a good friend, John Pry, up there in your area, that's a member. And that's his advice to everybody as well as mine now. Don't eat your seed corn. Keep reinvesting it.
Yeah, put it back into that snowball.
Yep. So this deal then, after we got all that money back, we still owned it, and it was still cash flowing $20,000 a year. So that's
magnificent.
25%.
Wow. Yeah.
Imagine if I'd have taken my son's $100,000 college fund and invested it in this deal, it'd be returning, paying for my son's college for the next 4 years, and then when he graduated, I'd still have the investment. Instead of what we actually ended up doing was paying the Texas A&M, 23 grand a year, and down the toilet it went.
Yeah.
Except my son did get an education, so I'm not going to
gig him.
Don't really mean that. And he's an Aggie, so
I can appreciate that.
Yep. So let's see. So we did 6 deals there initially. Those first 2 years, I pulled money out of my 401k. And I know some financial planners are going to cringe at that, but actually I took out a loan to put into a deal for $50,000, and I actually took money out for some $50,000 deals. And those deals tripled and quadrupled within 2 years when they sold. This was back when the Austin market was going crazy. Prices were going up so much because rents were going up.
Yeah.
So that was all that money, came back within 3 years. At $400,000, and then all got reinvested in new deals. And those deals refied or sold within a couple of years, and that money got reinvested in new deals. So now we're up to, I think this morning I counted 58 deals now.
From 6 to 58.
Yep.
That is absolutely incredibly powerful.
And the cool thing is I just had 3 of them sell within the last 2 weeks.
Yeah.
And $500,000 came back. And all that money now it's already earmarked for new deals that I've got scheduled to close in the next couple months. Just keeping the snowball rolling. So I retired in 2016, so 5 years ago. And I was, what am I now, 58? So I'd have been, do math, 53, retired at 53. So, way early.
Yeah.
And since then, normally when you retire, you tighten the belt, you lock in your income, and you try not to spend too much. Well, since then, my income has gone up every year using these, rolling this money back into investments.
Yeah, that's what a lot of people, they don't understand that with this model, your cash flow grows every year, provided you're reinvesting, again, the seed corn, the refis and the sales. So your cash flow increases every year, and your net worth, your wealth, your bottom line increases every year. You have essentially this house money that you keep putting in more and more deals. And Michael, you discussed in your portfolio, you talk about 3rd and 4th generation dollars. Could you describe that for our listeners?
Yeah, so those first 6 deals, once they refied or sold, they got put into new deals. So that's 2nd generation money. And though I had a lot of those refi out, and they're refining out 50 to 100%, within a couple of years. And that money now gets put into deals. That's third generation money, right? So it's been playing with house money this whole time. And I've had some of those refi and put into new deals. So a fourth generation. And then just this last week, 3 more sold. So that money's going back into new deals, fifth generation.
Fifth generation dollars already. And you started 10 years ago, 2011?
10, yep. Well, 2012 was my first deal. We joined late. No, yep.
Okay, so you joined late 2011, but you really weren't able to invest until 2012. So, yeah, you beat it. 9 years. It didn't even take you a decade. That's a very powerful story. And for you listeners out there, my friends, you've got to look at this. You've got to get started. Talk about a program that is so much better than giving your money to a 401k. My name is Mike Harrison. We'll be right back. This is the Lifestyles Unlimited Real Estate Investor Radio Show.
Warning. Listening to the Lifestyles Unlimited Real Estate Investor Radio Show will change your life. We will teach you how to create wealth and passive income so you can be financially free. And now, back to your host.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. I'm your host, Mike Harrison. And as always, we're working on your financial freedom. And talking about financial freedom, I have a guest on today's show that has achieved financial freedom in only 5 years after joining our program. And if you caught the first segment, Michael went to a free workshop with his wife. She actually told him, don't spend any money. Leave the checkbook at home. They signed up that evening and never looked back, embraced our program. How can you do the same thing? You want to check out who we are, what we do, how we do it? Well, we have workshops, and you can find that at lifestylesunlimitedworkshop.com. lifestylesunlimitedworkshop.com. If you want to sign up and join Lifestyles Unlimited, we're running a promo right now. It's only $297, but you do need to use the promo code SAVEBIG, all capital letters, Save Big. It'll take that retail price of $740, which is the cost of the program, and that's look, the $297 is way cheaper than what it was when I signed up, and it's the happiest, best move I ever made in my life financially. But again, promo code SAVE BIG. Where do you find that? You find that at GiveMeTotalFreedom.com. GiveMeTotalFreedom.com. You can sign up for Lifestyles Unlimited and take advantage of our full education program. Take our 2-day seminar, which is now in person, by the way, now in person. But you can also, as always, live stream it as well. So, Michael, we were talking about your portfolio has just absolutely blossomed over the last 9 years. What do you look for? How do you analyze a deal? What do you look for in the lead? Is there a deal type? Is there a property type? Give us a little bit of background on what you're seeking as you invest into these multifamily properties.
So, I guess what is most important to me is who's the lead. Who's the guy driving the train? Yeah. So that's probably 50% of my decision for most of my deals. So once I've established that the lead is reputable, and I'll call people that have invested with him before or her and see what they think. I want to make sure they communicate well, because nothing annoys not hearing from the guy that's in charge of my money, right? So they're supposed to communicate at least once a month. I got some leads that send out a quick update every Sunday night. Like, hey, the property's here, and they give me a short blurb on what's going on, which is great. Yeah. So then after I've vetted the lead, then it's what city are we looking at? Because I don't want too many deals down in the hurricane, down in Corpus Christi or anything along the beach. I've got a few, but not too many. Yeah. And then right now there's some hot markets. Like Phoenix is a blossoming market. Rents are going up 8, 10, 12% a year. That'll double your money in 1 year if that happens. Right. So I'm looking heavily into Phoenix, but that's not to say that I just joined a deal in San Antonio with a lead that I've done 2 other deals with. And once you've done a few deals with a lead and they bring you deal 3 or 4 or 5, you feel pretty comfortable, not having to analyze too much, at least for me.
Yeah.
And trusting the lead.
Yeah.
So it's lead and then city, and then I look at the deal itself. Is it a decent neighborhood? Is it a brand new property, that's less than 10 years old? I'll probably shy away from those because there's not a lot of upside. But is it a 1960s property? I owned one of those. When I retired, I went out and became a lead. I bought a 64-unit 1968 property here in Austin. And it's a lot of work. These older properties with the cast iron pipes and the sewer problems and the walls with no insulation. 60s gives you a host of problems, at least in my opinion. Some leads have done great with those age properties, but they're getting old.
Yeah, a 60s property will give you a host of, let's just say, learning experiences. How about that?
Yep. But you can buy them less expensive, and you can turn them around in a few years and sell them to somebody else and make good money on them. So that has happened.
Right. So it sounds like your strategy has evolved, and I feel like my strategy is constantly moving into a new thought or a new theory or a new idea of how I want to do things going forward. But it sounds like your strategy changed when you first started, or what was your strategy when you were in the 2012, 2013 time?
Boy, back then you're brand new, and I'm Central Texas, so the office was pretty new. There weren't many leads to choose from back then in Central Texas. So I'd go, the way you'd meet them is you go to a case study, and you look for leads. You ask people there. It's like, hey, who's the lead? Oh, there's one. I went over to Jerry and met him, and that was the first deal I got into. He was like the first lead that had a deal.
Yeah.
I didn't know what I was doing, and we hit a home run. The next few, same thing. You met him at case study. I actually invited him out. Back then we were a part of a boat club, so I'd invite these guys and their wives to come out with me and my wife out on the boat. We spent an afternoon with them. Like, get to know them before I write a check for $50,000 or $100,000. Nowadays, leads are probably a little too busy to do that, but that's kind of how I did. I made sure that I knew who I was dealing with.
What you say is real important. I had a lady, Beverly, on the show. Her and her husband, Gregor, are big passives, and I asked her that same question essentially, and she said that the lead is most important. But she also said something, and it stuck with me. She said, if that lead is the kind of person that you and your spouse could go have a nice 2-hour dinner with and spend time and engage in conversation, if the personalities match in that regard where that would be a good experience, then she said she gets a better feeling about the lead in that regard. She wouldn't invest with someone that she couldn't sit down and spend 2 hours with. So, very similar to you taking folks out on the boat and really getting to know somebody, but it is a huge responsibility. I can't imagine. I'm not a lead. I'm considering becoming a lead, but the weight of other people's money, the responsibility that comes with that is tremendous, and it's not something to be taken for granted. That's just my personal mindset. Michael, you've got a slide that you sent me, and it outlines poor spending versus rich spending. And I love that slide. I hope you don't mind. I made a copy of it and saved it to my desktop. Could you explain that for our listeners?
Yeah, and I think this came from a Robert Kiyosaki book, Rich Dad, Poor Dad, author. So for my entire life, it was, you get income from work, and then you use that to purchase things in your life. I call them, this chart calls them liabilities. So you buy cars, you buy a house, and many people think their house is an asset. But if you look at the chart that is drawn in by Kiyosaki, it's a liability because the house doesn't provide you income. The house costs you money every month. You got mortgage, you got taxes, insurance, maintenance. So income to liabilities, it's a straight shot. So what Lifestyles teaches, you take your income and you buy assets with it. So you buy rental properties, you buy apartment complexes, things that produce income.
Yeah.
And then you use that income that's produced to now buy liabilities as well as to reinvest. So, you want to buy a new car, instead buy a rental property and then use the $200, $300, $400 a month from that rental property to make your car payment. So then when the car's paid off, you still have this asset producing income.
It's a 180-degree opposite of what everyone's been taught in their life.
Yeah.
You want a nice car, go work harder, go get some extra overtime, work on weekends, take on a second job. And that's not what we're doing. We're letting our assets pay for our lifestyle. My name is Mike Harrison. We'll be right back. This is the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. It's time to turn up the volume and fine-tune your passive income plan so you can create the lifestyle you've always wanted.
Welcome back to the show. I'm your host, Mike Harrison. I appreciate you taking the time to tune in with us today. If you have any questions about real estate investing or about lifestylesunlimited.com, reach out to me. I'm here to help. My email address is askmike@luinc.com. Askmike@luinc.com. Now, another way you can gather information on what we do, one of the most exciting real estate events of its kind in the country is coming here to Dallas-Fort Worth. It's actually going to be in Irving, Texas, Labor Day weekend. Do something for yourself. Do something for your legacy. Do something for your family. Come check us out at that expo. It's September 3rd and 4th, Irving, Texas, at the Irving Convention Center in Las Colinas. I'll even give you a little bonus here. If you want to save $97 off any pass or package, enter promo code MIKE, M-I-K-E, all capital letters. But you can connect with successful investors, just like Michael described in the earlier segments on this show. Our guest today, Michael, is a passive investor in multifamily apartment communities, and he's in over 50 deals, almost 60 deals, and he started just 9 years ago. So come check us out at the expo. There'll be investors there, the entire Lifestyles Unlimited team, mentors, sponsors, lead investors. It's all right there. Now, how can you find that information? That is at wealthandpassiveincomeexpo.com. wealthandpassiveincomeexpo.com. Michael, will you be attending the expo? This year you'll need to drive north. Normally we're holding this in Houston.
Yeah, absolutely. I've been to the expo every year since I became a member that it's been going on. And it's a great time. A lot of happy people there that are on the road to financial independence.
It's good to connect with friends at expo and share stories, people that we don't get to see, if they're in Houston, or there's a lot of people that come from all over the country. It's pretty incredible. I met people from 20, 30 different states last year.
Yep. I met a guy from Australia last year. In fact, he still comes to my meetups, my Zoom meetups every month.
Outstanding. That's great. So, Michael, quickly, you and your wife were 401k investors for 25 years. You're doing everything right, doing everything they told you. I was doing the same thing. Yet, when you started investing in real estate, you retired in just 5 years. And as you say, 12 years ahead of schedule. What do you personally see as the problem with the 401k?
It's locked in there, right? They penalize you if you pull it out before you're 59 and a half. So most people say, well, you at least got to last that long. And then if, there's rules around it, when you can take it, how much you can take. It's just, if you want to retire early, that's not the way to do it. And then, of course, it's locked in the stock market.
Yeah.
Right. So, and we've all seen what happens with the stock market going crazy every cycle, 6-8 years, and they're projecting another one.
Just like the song goes, what goes up must come down, right?
Yeah, exactly.
Would you describe, so you're a 401k guy, you and your wife, you transition to real estate investing. It's changed the game for you. Would you describe what you've been able to accomplish in 9 years as difficult or complicated?
No, not complicated. I mean, passive investing, I talked to my family members about this way back when I first got in and described what we were doing. And I think I must not have done it very well. My brother-in-law thought I was trying to get him to change careers. We're not talking about a career change. We're talking about passive investing, right? You write a check, and then every quarter a check arrives in your mailbox. That's all you got to do. There's no career change. You're free to continue working. If you enjoy your job, keep your job. Then you're free to travel. There's no requirement as a passive to do anything.
It truly is mailbox money. And I talk to my friends, I talk to family members, and some of them, they think I'm from Mars. They feel like there's strings attached. And I'm like, no, there's strings attached to your 401k. Talk about some strings. You're wrapped in that. And I guess if 65 is the game you want to play in life, then go for it. But I kind of want to live a little bit before then. You had mentioned family earlier, Michael. What is this real estate investing? What has it meant for your family? How's your family grown around real estate investing?
Yes, I've got two sons, Chris and James, and they're both not investing in 401k. They're putting their money in multifamily passive deals now. My younger son, he was 17 when we joined, and so he got in under the family membership. So he got in for free to be a passive. So we took some of his college money and invested in a deal, like $25,000.
Yeah.
Put it into a deal in Austin, and 2.5 years later it sold, and he got $67,000 back. And so it impressed him. He thought he was going to be a stock trader. So he switched over to real estate, got a master's in commercial real estate, now works for a law firm that protests property taxes for commercial real estate, and a fair amount of lifestyle leads, actually. And he's on the road he's purchased, I think, 11 units in Waco of duplexes that he's purchased and now sold with partners, and now he's got an 8-unit apartment up in the Dallas area and looking for a 30 or 40 unit. Wow.
Okay, so he's transitioned to being a lead.
Yep, he's getting there. Right now he's an IRO, independent rental owner.
Okay.
But at some point, he will transition to be a lead.
Wow.
The older son's a software engineer, and he's happy doing that, loves what he does, but he's not contributing to 401k. He's putting his money into multifamily deals.
So they've seen the power of real estate, obviously, firsthand, and now that they're beginning their careers, they're not participating in the 401k. That's great to hear because, again, it's a trap. You don't think it's a trap because everyone around you is doing it. Everyone in your culture is telling you to do it. You've been programmed, essentially, by media and marketing, and you can't watch a golf tournament without seeing all the sponsors or all these advisors, financial advisors, and 401k companies that manage 401ks, Fidelity, that sort of thing. It's everywhere around us in society, and people don't realize it, but I always say, follow the money, right?
Yep.
Follow the money.
They entice you with that matching, that company match. It's like 4% company match. If you put in 4, they put in 4. So that's free money. That's what I was going for. Right. That chart I sent you kind of tracks, okay, let's compare. You're limited to about $5,000 a year you can put into the 401k. If the company, let's say a company matched you the full amount, $5,000, so that's 10.
Yeah.
And then we'll take $5,000 and invest it in multifamily and watch them over time. And I think multifamily right now is returning, if you count cash flow and equity gain, about 20% a year. And compare that to the market. Stock market averages 7% a year over any 20-year span. And so they equal themselves at about, 7 or 8 years out is when multifamily catches up to that matched money. But multifamily money is money you can spend. You're getting cash flow every month. Money's coming back into your account or every quarter. 401k, you're not going to see that money again till you got gray hair. That's the difference.
And it's a big difference. And then you didn't even mention the tax implications.
Yeah, 401k, my gosh, when you retire, start pulling that money out, it comes out at earned income, the top tax bracket.
Yep.
Earned income rate, right? Multifamily comes out, and if you're doing it right, is tax deferred until you pass away, and then your kids inherit it, and they get a step up in basis, at least so far,
Yeah.
Unless this administration changes that.
Yeah.
So they won't have to pay anything on it. So you can defer taxes until you die. So, yeah, it's not quite tax-free, but it's tax-deferred potentially forever if you do it right.
Yeah, if you do it right, you can continue to kick that tax can down the road.
Yep.
So, Michael, you really saw the power of real estate early on. You went to the workshop, you went to the 2-day, and you said, yeah, let's do it. Whereas my transition was much slower, started with houses and then progressed. It wasn't until 2018 that I became a preferred member of Lifestyles Unlimited and began investing in multifamily properties. So that was about 4 years ago, and those properties now, year 4 seems to be the magic number on a lot of these deals. They're starting to bear fruit, and I'm able to put them into other deals. But if someone out there is listening to us right now and they're saying, I've got to do something to create passive income or invest in real estate, or what sort of advice would you give them to get started?
Yeah, you got to get educated. You got to get that team. And one of the ways to get the team is to join Lifestyles. They've got a team ready to go. But that book, Rich Dad Poor Dad, I'd give that away to people just because it changes your mindset. The way Lifestyles does. Very easy to read, short book. And then come to that workshop and learn. It's like a 1-hour workshop. Get involved, and then from there you go to that 2-day training, and it'll just blow your mind on everything you thought you knew.
I think that's great advice. Michael, I really, really appreciate you coming on and sharing your knowledge with our listeners today. But I want to tell you listeners out there, listen, my friends, we do this for a lifestyle.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.